Welcome to revenue recognition under ASPE 3400 long-term contracts. Here, we are going to review percentage of completion method and completed contract method. The choice of method affects the timing of revenue and expense recognition, which in turn impact financial statements and key performance indicators. Introduction to ASPE 3400. ASPE 3400 provides guidelines for recognizing revenue from the sale of goods, provision of services, and long-term contracts. For applicability to long-term contracts, accurate revenue recognition is crucial for reflecting the true financial performance of an enterprise. Revenue recognition criteria. First is risk and reward transferred. Significant risk and rewards of ownership have been transferred to the buyer. Collectibility. It is probable that the economic benefits will flow into the enterprise. Measurability. The amount of revenue can be reliably measured, including any potential returns. And lastly, performance. The enterprise has performed its obligations with delivery occurring or services rendered, and the seller's price to the buyer is fixed or determinable. These criteria ensure that revenue recognized only when it's earned and realizable. Each criterion must be met for revenue to be recognized. Percentage of completion method. The percentage of completion method recognizes revenue and expenses based on the progress of the contract. This method is suitable for contracts where the outcome can be reliably estimated, providing a more accurate reflection of ongoing performance. We can now talk about completed contract method. Completed contract method recognizes revenue and expenses only when the contract is completed. This method is used when the outcome of the contract cannot be reliably estimated, ensuring that the revenue and expenses are recognized only when the contract is complete. We can now start to look at an example, percentage of completion method. A construction company enters into $1 million contract to build a bridge. The contract is expected to take 3 years to complete. Costs incurred to date are $200,000 in year 1, $400,000 in year 2, and $400,000 in year 3. The total estimated costs are $1 million. So let's consider the 4 revenue criteria. Risk and reward transferred. The company has transferred significant risk and rewards of ownership to the buyer as the project progresses. For collectibility, it is probable that the economic benefit will flow to the enterprise, so this is met. Measurability, the amount of revenue can be reliably measured based on the percentage of completion. And lastly, performance, the company has performed its obligation as the project progresses, so this is met. For the calculation, year 1, revenue recognized would be just $200,000. So $200,000 divided by $1 million is just 20%. Year 2, there was revenue recognized of $400,000 plus $200,000, which is $600,000. So by year 2, 60% is complete. And last year, total of $1 million is recognized, which makes it 100%. As recommendation, use a percentage of completion method to recognize revenue and expenses over the life of the contract. Now, let's look at completed contract method. A construction company enters into a $1 million contract to build a bridge. The contract is expected to take 3 years to complete. Costs incurred to date are $200,000 in year 1, $400,000 in year 2, and $400,000 in year 3. The total estimated costs are $1 million. So when we consider the 4 revenue criteria, risk and rewards transfer, the company has not transferred significant risk and rewards of ownership until the project is completed. Collectibility, it is probable that the economic benefits will flow to the enterprise. Measurability, the amount of revenue can be reliably measured upon completion. Performance, the company has performed its obligations only upon completion of the project. The completed contract method recognizes revenue and expense only when the contract is completed, while the percentage of completion method recognizes them as work progresses. The former is used when outcomes can be reliably measured, and the latter when they can. So for the calculation, revenue and expenses are recognized only upon completion of the contract. Year 1, the contract is still ongoing, so revenue is 0, expenses is 200, profit minus 200. Year 2, still not complete, 0, expenses $400,000, profit is minus $400,000. Year 3, when the contract is complete, revenue finally get recognized by $1 million, expenses $1 million, profit to 0. For conclusion, we discussed the two primary methods for revenue recognition under ASPE 3400, the percentage of completion method and the completed contract method. The percentage of completion method recognizes revenue and expenses based on the progress of the contract, while the completed contract method recognizes revenue and expenses only upon completion of the contract. Both methods require meeting the 4 revenue recognition criteria: risk and rewards transferred, collectibility, measurability, and performance. The choice of method affects the timing of revenue and expense recognition, which in turn impacts financial statements and key performance indicators. Accurate revenue recognition ensures compliance with accounting standards and provides stakeholders with reliable financial information.